Hello, this is Marie Conser. I'm a real estate broker here locally in Portland, Oregon, and my guest today is Tim McBratney. Tim, can you introduce yourself?
Yes, be happy to. My name is Tim McBratney, and I'm a senior mortgage advisor with PacRes Mortgage right here in Portland, Oregon.
Perfect. The reason for our call today is we will be talking interest rates. They are on the rise. And in my 2022 video, I actually mentioned that the consensus, the expectation for 2022 was that although the interest rates would be increasing, they would stay most likely below 4, reaching close to 4, but not exceeding 4. Well, turns out things happened a little bit differently, didn't they, Tim? So can you tell us a little bit about what has happened?
Yeah, I'd be happy to. Indeed, the forecasts were a little bit lower than they have been, but really what is a key driver of interest rates is inflation, especially long-term money like mortgage rates, that stretch out to 30 years. If you are a person on a fixed income, let's say you have a treasury that's paying you whatever 4% per year, and inflation starts rising, it's eating into your buying power. So rates want to correspondingly rise with the rise in inflation. So inflation, while at first was considered to be transitory, the Fed spoke of that quite often. It's turned out to be kind of a nagging effect that's lasted a lot longer than we expected. So rates correspondingly have been rising with it. So I will say this, though, we seem to have hit a pretty strong ceiling, and we're very hopeful that that ceiling will hold. It has for several weeks now, and we're hopeful that we may be at our peak.
Well, that's good news. I have to say, a lot of people were asking me, do you think it will calm the market, that we'll see prices adjusting down now that the interest rates are going up? And we have not seen that. We are continuing to see multiple offers. We're continuing to see purchase prices to be significantly higher than list prices, especially on the properties that are in good locations and updated or even upgraded. So there is still a lot of cash in this market that I feel compensates for this increasing interest rate. Is that what you have seen as well?
I have indeed. Yeah, I completely agree with you. Just today, literally, one of my clients was interested in a home, and so far there are 19 offers on that particular property. So these higher rates are not slowing down the market any bit. And perhaps if they were to continue to rise, we might see that. But so far, we're not. I think if you put things in perspective, when I first started in this business, my first mortgage was at 12 3/8. So by relative standards, these rates are ridiculously low.
Right.
I even did a construction loan at like 23.5%, which is kind of crazy. But
Wow.
These rates are very, very low, and they're on sale, as my boss likes to say.
Yeah. Yes. No, it's true. Historically, they're pretty low interest rates at the moment. What do you foresee for the rest of 2022? And maybe it's hard to forecast that right now with inflation still up in the air. But what is kind of what is being talked about in your industry?
Yeah, thank you. One thing to be aware of, people always hear on the news, the Feds are raising rates, and that's one thing. Mortgage rates are really an entirely different thing. Mortgage rates are traded every single day on Wall Street. They're a security funded through mortgage-backed securities. So they're very volatile. So if you see mortgage rates rising, it's because the bond traders are trading accordingly, even if the Feds have done nothing, which they have not done so far. However, it's actually considered a very positive thing if the Feds start raising short-term rates. They basically affect the rate that banks use to borrow overnight so that they meet their requirements for assets in each bank. So if the feds act now, it's indicating to long-term money, mortgage money, that they're trying to do something about inflation today. And oftentimes mortgage prices may come down. So we are anticipating, it's been a lot of talk about the feds raising rates in their next meeting, which is March 15th and 16th of this month. So we're rather hopeful that they'll raise rates.
Okay, great. Well, thank you very much, Tim. We will keep an eye on this. Absolutely. Again, rates are increasing. We kind of knew that. It might have been more volatile than we expected initially. Not much of an effect at this moment on the market, but we'll keep you all posted. Thank you so much, Tim.
Yeah, my pleasure. Thank you.
Bye-bye.
Bye.